back to Founder Focus with Globe. I'm your host Sunlight, and today I'm delighted to welcome onto the show Michael Cameron, co-founder and CMO at Vanilla Finance. So what do you want to find out about all the amazing products that they're building at Vanilla Finance, Michael's background and his journey into Web3, and also his thoughts on DeFi. Okay, so welcome to the show, Michael. How are you?
Doing well, yeah. Thank you, thank you.
Good,
Long
good.
weekend here, so super excited about that.
Oh, amazing. Enjoy. So, would you like to tell us a bit about your background and your journey into Web3?
Sure, yeah. My journey I think is quite interesting. So I originally started in crypto in 2013. So it's more than 10 years. I think in my journey in crypto, there's not many people I've met that have been in the industry as long as I have. I kind of fell into it in a really unique way. I was working in a very, I'd say, Web2 company in Toronto, in Canada. And this company is called 500 PX or 500 Pixels. They're essentially a photography company that does stock photography and license their photography to different companies. So on one side of the business, photographers will upload content, and on the other side, we will license that content to like Google or Airbnb and all different types of businesses. We had a lot of success because we were one of the most premium licensing companies. So there's a lot of options out there like Stocksy or Shutterstock. Those images are very low quality, like 99 cents companies can buy photos. Our minimum was around $150 per image. So we had a lot of big clients. We worked with Airbnb and Google and many different, very big clients. And so we were always looking at ways of innovating, whereas other companies were just basically like the penny stocks of the industry. So one of the things that we looked at was how to store the photos in a way that they could not be, I would say, stolen. Because in that industry, IP infringement is a massive issue. So we would always host internal hackathons, and basically once a month we would host hackathons where different parts of the team would break up into smaller teams, and we would all explore newer technologies on how to innovate the company to make it better for the end user. And so the team that I was in, we were exploring different ways to store photos, and so we started looking into technology, and we stumbled across something called IPFS, which the acronym for that is Interplanetary File Storage System. And so when we started researching into this, this is a technology that was created inside of the blockchain space, like around 2012, 2013. It was basically a way to fragment data. Not to get too technical and deep into that, but long story short, what ended up happening is we stumbled across blockchain as a technology, and at that point in 2013, there was Bitcoin, there was Ethereum, there was maybe one or two other tokens that existed at that time. So what ended up happening was we did a lot of intensive research, and we actually implemented that product into our main product. And I then started researching personally into crypto and into blockchain. I don't want to use the word crypto because crypto was not really a thing at that time. And I stumbled across crypto at that time, or blockchain, and realized, holy shit, this is the future of technology. And so from then until now, I've never left the space. So it's been a wild journey, but that was kind of my landing into Web3 was really just, I would say, by fluke. I think I would have joined the industry anyway, but at the end of the day, that was sort of the thing that kind of kickstarted everything.
Yeah, that's amazing. All the way back in 2013. So was it a type of thing where, you found out about blockchain and then you kind of left the licensing job and just went all in, I suppose, in blockchain?
Yeah, it was. I wouldn't say I left. Like that company actually got acquired. So a lot of things had shifted, and also I was starting to think about what my next journey was anyway. So I was thinking about moving to Asia. So that's when I had left anyway. So all of it just kind of timed up at the right time. I didn't know that when I moved to Asia, that Asia was like the leader in blockchain at that time. Like back in 2013, the West was not talking about crypto. No countries were talking about crypto. The only place where real development was happening was in actually like mainland China, um, where let's be honest, a lot of the centralized exchanges, they all come from mainland China, except for a few like Kraken, Coinbase, Crypto.com, but almost every other one comes from China. So when I had originally moved to Asia, I stumbled across that. Wow, this industry is developing like in crazy here. So then naturally, I just fell into that industry, already having done my research and being interested in it. I had spent like about half a year or a year networking and just building up some relationships. I started a blockchain as a service company. We basically built out like infrastructure for very early stage wallet as a service and blockchain as a service and all different kinds of servicing companies. I ran that company for about 4.5 years. We signed on some of the biggest clients. We signed on um, some really large insurance companies based out of mainland China to build their back end infrastructure using blockchain. So for me, blockchain's different. I think when most people think about blockchain, they think of the money side of it, the crypto side of it. And of course, that part's important because that's what brings it to mass adoption. If people can't earn money from it, then there's nothing really interesting. It would just be an infrastructure product. But for me, my beginning like 5 years in crypto was all about infrastructure. It was all about the technology of blockchain and not the financial side of it. So I think that's the part that I fell in love with, and until today, that's the part that I still really care about. Although the financial part I do understand has a big importance, especially for like go to market and stuff. But I think that technology is at its core, at its foundation, is a technology that is incredibly important. However, I think that from the beginning of blockchain until today, I don't think that the real use cases of blockchain have actually been done as well as they could have been. I think there's a lot of use cases that still have a long way to go. But yeah, I think that was kind of my journey after 500px into crypto.
Yeah, amazing. So, right, so in your 12 years of being in the blockchain space, I mean, a lot must have happened and you must have gained a lot of experience. So, what would you say your biggest lessons are, and how have you seen this change in the blockchain space in those 12 years?
Yeah, I mean, I think it's definitely been a wild journey. I guess I would compare it to like what the boom of the internet would have felt like back before I was born, or when I was quite young. It's exciting. There's a lot of innovation all over the place. I think that's really exciting about it. There's also a lot of negative things as well. A lot of scams that we've witnessed, even from massive companies. So these are just kind of the growing pains of anything new. Only the real builders will survive the long term. But in the early stages of crypto, I think most people were focused on much more of the infrastructure side. People were more focused on like to throw out some, I guess OG terms would be like Hyperledger or these types of really blockchain infrastructure focused products where shipping companies were looking at exploring blockchain in terms of how to tracking like the movements of shipment on chain. Those were things that were happening really early in the crypto industry. And then the whole financial side came into it with like centralized exchanges. And Ethereum was obviously a massive boost. Like, even though a lot of people nowadays, they look at Ethereum and they say like the price is not moving great, but at the end of the day, Ethereum is why we're here, why you and I are even on this call. I mean, back in that time, for you to build a dApp, you would have to do it from complete scratch. Ethereum created sort of this kind of like infrastructure where you could build dApps on top of a network, which made it really accessible and brought it to the mass adoption at that point. So I think when Ethereum came out and people were able to build dApps, fairly simple. on Ethereum. I think that really exploded the industry for like the first, we can call it the first bull run. And then, and then we had a lot of DeFi products came out, which focused on much more of the financial side of the industry rather than what it used to be, which was just the infrastructure side. And then I think, the next 5 to 6 years after that has just really been exploding more on the financial side with centralized exchanges becoming, massive companies. And then now with decentralized exchanges also, taking a large market share away. So I think the industry is still kind of like finding its footing, and it's not quite there yet. Um, and then I think most recently also is just the amount of chains that have come out, like layer twos, layer threes, just is a little bit like too much, right? Like it's hard for people to keep up. And then there's a lot of growing pains with that as well, such as like, bridging assets. If a user wants to use this chain, it's not Ethereum compatible. They have to figure out how to bridge assets from Ethereum to this. And so the industry is kind of, because it's highly innovative and progressed so fast, a lot of challenges come with that. So I think that over the years we've kind of run into that as an industry, to how to solve those problems, right? So in some ways innovation is great, in other ways it creates more, I would say, end user issues, which again is just a natural thing of growing pains. But ultimately, it's something that we need to solve as an industry if we really hope to officially adopt everyone in Web 2 into Web 3. I think that's kind of the key goal of what everyone's trying to do in this industry.
Yeah, for sure. So speaking of problems, could you tell us about, what problems you're solving at Vanilla Finance?
Sure. Yeah. I mean, we our original goal was to set out to be a decentralized platform, which essentially creates products that are innovative in their approach of how we create products that are unique, especially in Web 3. Two of our products, we offer a product called Super Perps, which is just essentially a perpetual product, and then we offer another product which is called Meme Perps, which is you can think of as like a meme perpetual. These two products are based on Web 2 financial products. So Super Perps is contract swap product, and Meme Perps is total return swap product. These products, these terms are very familiar in Web 2, but in Web 3, people are not familiar with them. So our main goal is to innovate, bring new and exciting products that are revolutionary to Web 3. But on top of that is to also figure out how to simplify the onboarding experience, simplify the just the overall UI UX, so that basic users can understand how to enter into the decentralized side of crypto, right? So I think that centralized exchanges have done an amazing job at moving people into crypto, mostly because they're like a centralized exchange kind of feels like a bank, right? You don't really have to be concerned about what chain you're on. You can transfer money in and out quite easily. But then decentralized exchanges came into the industry, and when they first came, they were like incredibly rigid and terrible UIs and awful experiences, like bridging and swapping and all of this kind of stuff. So I think that mass adoption was really hard for users to understand. But in probably about the last year, what we've noticed with DEXs is that like meme coins and pumped off fun and a lot of these sort of DEX products have really opened up the decentralized space to the entire mass adoption, the entire world, because of the meme culture. So Web 2 people can love meme culture, right? So maybe they love that meme culture so much they want to buy this token. So I think improving the user experience, the UX UI, is a really key part. So this is something we take incredibly important, and we make our products incredibly innovative, but also incredibly simple to use. And I think that this is something that really sets us apart from most other players in the space. That when you're using our product, it doesn't really feel like you're using a decentralized product. And the example that I've given over the years is that when you transfer money from your like Web 2 bank to pay a bill or to pay a friend for the drinks that you paid for them last night, you don't need to like choose what chain you're on. or you don't need to ask your bank, what infrastructure they use. You just send money from A to B. I think this is the main point of money transfer, is that it should not be so convoluted where you have to understand which chain you're trading to and can the money disappear and things like that. So these are things that have really been an issue in the industry, but I think they're finally being solved, at least in the decentralized space. And, I think we're playing a big part in doing that.
Amazing. Yeah, let's dive a bit deeper into that actually. So, with the kind of interoperability, is Vanilla Finance looking at that also?
Yeah, definitely. I mean, for us, how we want our users to feel when they're trading crypto is that they're just withdrawing money, depositing money. They're trading with that money, and they can send it back to basically any chain that they want. I think interoperability is a word that's always been thrown around in this industry, but I don't think that there are people out there that have created real solutions for this. But I feel that the problem is that those solutions have not been adopted into the products. So, like, if we think of like MetaMask as an example, MetaMask is a product that most people are familiar with, right? And if you go to pretty much any decentralized website, chances are they accept MetaMask as a login method or a payment method. And so that's we can consider that to be really great adoption in crypto. But when it comes to MetaMask, they're a terrible product at its core. Like back in 2019 or 2018, whenever MetaMask first came out, it was a good solution at that time, right? It created a unified wallet across all different types of dApps, but the amount of security issues they have, the lack of interoperability, all of these things made that product really, really bad. Looking back at it now, and they have never really improved their product over the years. It actually has not changed. I actually logged into MetaMask yesterday and was like, wow, it's still the same. Nothing has gotten better. Um, so that's their problem, not ours. But I think that to really have pure interoperability, the problem with it now is that because there are over what 5-10,000 layer twos and a ton of layer ones. The problem is that there is no one solution to solve interoperability. It really depends on the product itself, like Vanilla itself or another team, to really integrate some kind of infrastructure interoperability solution to make their product better. So a user may use one product and find that, wow, this product is really, really easy to use. It uses some kind of interoperability infrastructure, but they may use another product that doesn't do that. And then they have to figure out, oh, how do I bridge? How do I swap? What chain is this on? And so I think that it's being solved, but it's fragmented, and that's the problem with interoperability, is that to have pure interoperability, you can't be fragmented, right? And chains are the perfect example of fragmentation. So what we are focused on is we're not focusing on trying to solve interoperability as a whole in the industry. We're just trying to focus on solving it for Vanilla to make our product user entry point as simple as it can possibly be. And we've achieved that. We've had Web2 users who have never used crypto before and have given us feedback and said, yeah, your guys' product is super easy to use. I understood how to do it in like 5 minutes, and I've never used crypto before. So I think that we've achieved our goal in that sense.
Yeah, that's amazing. And I think one of the biggest kind of barriers to entry is how daunting it can be to actually, figure out how do I do this? How do I do that? And then, yeah, so it's amazing that you guys have solved that. Yeah.
Mm-hmm.
Yeah. So, right. So tell me more about the vanilla community. What does it look like? Who's in the community?
Sure. Yeah. I mean, our community is quite big. We have roughly about 6 million users, and that's growing every single day. So lots of user data to go through. But in terms of the community itself, we have a really good divide. I think some of the current data is, we have like a lot of users from US. We have a lot of users from actually the UK. We have a really strong presence in the APAC region, Southeast Asia, Latin America, Canada as well. So yeah, we cover a pretty global audience. We also put big pushes on South Korea and also on Japan. we really focus heavily, since we're a trading product, we focus heavily on regions that have strong buying power, and that particularly like DEX products or perpetual products. South Korea, Japan, those are perfect examples of that. Vietnam is another example. With growing markets in like Latin America, and obviously US is big fan of like future products, perpetuals. So we have a very diverse community for sure. But yeah, we've definitely have seen a lot of success. I mean, we went from 0 users to around 4 million in like less than 2 months. So I would say that's a pretty big win. And then in terms of other things related to statistics, we've had a lot of success in terms of trading. We have roughly about 1.3 million traders in total, unique traders. That's a pretty big achievement. That for a DEX, that's almost comparable to some centralized exchanges. So I think that we've obviously solved a problem that existed, and obviously we have a good market fit. So yeah, I think our community is super active. They're always engaging with us on a daily basis, and we make sure to engage back with them and keep them informed about our next steps. But yeah, so far it's been a really great job on how we manage our community.
Yeah, amazing. So it really feels like you understand your users' needs as well, and you're kind of building on that for the future. So just in terms of DeFi in general, what does the future of that look like? And do you think, there's going to be any coexistence with traditional finance, or do you think, DeFi will actually disrupt traditional finance?
Um, yeah, I think the answer for that is that DeFi already is disrupting traditional finance. I think that for DeFi to become a part of traditional finance, I think that there's a lot of things that need to be done as like an industry standard. I don't like to throw out the word regulation because I don't really like regulation in crypto. But I think that there does need to be some type of standard for DeFi if it ever hopes to be integrated into traditional finance or into like traditional hedge funds or even liquidity. I've had a lot of conversations with VCs regarding this, and a lot of their investor portfolio companies are currently they're really interested in crypto, and most of their assets from their hedge funds are put into centralized exchanges because that's where you can typically get the best reasonable price for buying. But obviously with dexes there's a lot more flexibility. You have control of your own funds. um, you hold your own keys, which is really important. And in some ways, dexes can even be cheaper than centralized exchanges in terms of transferring and buying, especially when you're buying, like, let's say a hedge fund wants to invest 500 million US dollars into buying Bitcoin. Going through a centralized exchange is probably a really bad idea, but to be honest, that's the only place they really can go right now because of the level of security, because of the regulations, because of all that stuff. Dexes are just not there yet. So I think if dexes ever want to really truly integrate the liquidity from Web 2 into Web 3, there's a lot of things that need to be done on the standard side of stuff. And we're probably, to be honest, kind of far away from that. I mean, dexes are only really having their bull run or their real like market grab share within maybe the last 1 to 2 years. The last cycle was really big. The last two cycles were focused on centralized exchanges, and I think a lot of users, the way I always describe it is there's two types of users, right? There's users that don't really care that their bank owns their money, and then there are users that do care that the bank owns their money. And if we talk about what the Bitcoin ethos is from day one, is that Bitcoin and crypto was meant to make it so that we are in control of our own money, right? I always explain this to people. If you have a million US dollars in your bank account and you go to the bank and ask them to give you cash right now, they will not give it to you. They'll ask you a million questions as to why you want it, and maybe they'll tell you to come back. And I don't think that most people realize that the banks don't actually have 100% of user funds, right? They loan out a lot. They give mortgages. All this stuff has to come from somewhere, right? It comes from users. So we can kind of think of banks as like a more controlled FTX in some way. So for me, the whole point of crypto is the decentralized part, right? It's my money. I can do what I want with it. I can move it where I want it to. That's not to say I don't use centralized exchanges. I do. I just don't hold very much money in them. So I think that overall, as an industry, decentralized exchanges are going to take a huge part of the market share, and they already are. I mean, we see platforms like Hyperliquid that are already doing 6 times more trading volume per day than Binance. Or if you actually take Hyperliquid's trading volume over the last week, I think it's like more than the top 10 centralized exchanges in the last week.
All
So
combined?
10x. Yeah, combined.
Wow.
So there's obviously a lot of money being moved into DEXs, but there's still a long way to go for that to be, for us to really pull a certain percentage of users from centralized exchanges into DEXs. And again, I don't really like to say it's like centralized exchange versus decentralized exchange. They're two different products. Different users have different needs. Both of them need to exist. It's just a matter of that there are enough options out there for people to make their own choice. And that's really what it comes down to.
Yeah, the ethos. It
Yeah,
all comes full circle.
exactly.
So, Michael, what does the roadmap look like for Vanilla Finance until maybe the end of the year?
Sure. Yeah. So, I mean, definitely our team is putting a really big push on TG now. We have a lot of our user base that is, really wanting us to do that. So we want to keep to our promises about TG, but at the same time, we want to make sure that with our TG that we do everything correct. And I think a lot of the times, users are not really aware of all the necessary steps that projects have to do for TG, the preparation. Making sure that you have enough investment, that you have a bit high enough FTV, that you have the right terms with exchanges, that your user base is large enough and big enough for you to be able to go and do your TG, to be able to do all the proper steps of leading up to TG. It's countless hours of work, and I think that most users are not, or some users are not aware of how complex it is to have a successful TG. I mean, any project can launch a TG, right? I could launch a product tomorrow, then TG next week by paying some tier two exchanges to list me. But that doesn't mean I will be successful, right? So I think the big thing for us is to make sure that we try to keep true to our promise of when we want to launch TG, but also to make sure that our TG will be the most successful. And that's not just saying that we want it to be successful for us. If the TG is successful, it's successful for everybody, including the users, right? So that's kind of one thing I really want to voice out and get out there is that we are obviously doing our absolute best to make sure that our TG is in the best preparations every single day. And then after TG, we will focus on launching our product on additional chains. But again, keeping in mind that we want to remain interoperable so that it's very native for users to be able to transfer between these chains and not feel like they're using Solana or using BNB. And then we will also put a big push on both of our products. So our Super Perps product, we will put a big push on our Meme Perps product. Especially with our meme perps. So we launched our testnet of meme perps this week, and I'll go a little bit into detail of that just so that everyone's aware of what that product actually is. So our Super Burst product is a perpetual product that allows up to 10,000x leverage with no liquidation. When most people hear that, they think that's insane. How do you have 10,000x with no liquidation? So we wanted to create a product that allowed people to essentially synthetically own like one single Bitcoin for as little as $10. So what it means is that during the trading window, if you invest $10 to open a trade, you own a single Bitcoin for that 10 minutes. So let's say that if Bitcoin goes up by $1,000 in 10 minutes, you make $1,000 profit. So we're actually allowing users to synthetically own one BTC for 10 minutes for $10. And then we offer options for 5 BTC. We offer options for like over 1,000 different trading pairs. So you can buy like 10,000 Dodge for $10 or $20, depending on the market. So that's where the 10,000x comes from. The no liquidation means is that with traditional perpetuals in Web3, if you say that token that Bitcoin's going to go up by $100 in the next hour, but it goes down by 1,000, you will get liquidated for 1,000, right? So that's liquidation. With our product, if you trade one BTC for 10 minutes for $10, the only thing you can lose is the $10. So if the price goes up by 1,000, you make 1,000. If the price goes down by 1,000, you only lose a $10. So the liquidation is no greater than your initial investment. So this makes a product with 10,000x leverage incredibly low risk, which is unheard of in Web3. So that's kind of our very innovative approach to this product, and why we have so many users that trade it. Because for $10, if you can make the potential of making 1,000 and only losing 10, that seems like a pretty good deal. And then moving on from the super perps over to our meme perps product, which we just launched. This product is also very innovative. The way I always describe it is, as soon as a meme token is created on Pump.fun or on Springboard, what ends up happening is that once it reaches a certain threshold of market cap and trading volume, it will actually move to a DEX like DEX Screener or PancakeSwap. At that moment, about like 0.01% of all tokens actually succeed, right? They reach a $10 million market cap, and then they reach 100, and then they reach a billion. And we've seen that over the last year, that the amount of money that people lose in that space because they're hoping for the next cat with hat or dog with hat token is such a small percentage, right? You almost have to be an insider to understand how to catch those tokens at an early stage. Like if you catched dog with hat at a $5 million market cap and you put $1,000 into it, that's like 20, 30 million US dollars that you would have made in a week. But let's be honest, most users don't have access to that type of insider trading. So the product that we created is that our product, as soon as a token graduates from a launchpad and moves to a DEX, you can actually short the token. So meaning that you can make money on the way to zero. So that's the other 99% of tokens that are not successful. You can now make money on those tokens with us. So if a token graduates from Pump.fun to DEX Screener, and you say this token is going to zero, it's no way it's going to 10 million, 100 million, 1 billion, then you can earn leverage on it going down to nothing. So this is a very innovative product, and we feel that we're closing the gap. Rather than having to be the insider that understands the 0.01% of tokens that are going to succeed, you can now be the user that understands that 99% of tokens are going to fail, and to capitalize on making money on that. So we're going to put a very big push on these two products and continue to develop, more innovative products. And so I think that up until the end of the year, that's really our focus, is deploying on more chains, launching TG, and continuing to develop innovative solutions for DeFi.
Mhm. Yeah, well, those products sound absolutely insane. So, like, how did you even come up with that?
Well, like I said, they're actually they're innovative in terms of Web3, but they're not innovative in terms of Web2. Like TRS is a product that has existed in traditional finance since like the early 90s. And profit swap contract PSC is a product that existed even further back than that. It's essentially just a different type of option or a different type of perpetual product. So we're actually not really innovating new financial systems. We're actually just taking traditional financial products and integrating them into Web3.
Okay, amazing. I mean, still, that's innovation.
Yeah, it is. Yeah,
Yeah.
you can call it that. Yeah.
Yeah, I mean, so do you have any closing comments for our viewers?
No, I just think that we've based on our data and our success, we've had a really great run, and we're not stopping anywhere. We're not a project that's just going to TG and disappear. We're really building for the long term. And so, we're going to do everything we can to make sure our TG is successful so that we can continue this narrative and keep pushing the decentralized space. We hope to be one of the biggest decentralized exchanges, in the long term. And currently we're doing, we're very much on par to do that. We dominated TON. So we were the largest decentralized exchange on TON by trading volume, by users, by a lot. And now we're on BNB. We are also right now, actually, we're ranking first on BNB chain at the moment for derivatives. So we're ranking first in terms of transactions and also in terms of active on-chain users. So, the way that I always like to say it is we went on Ton, we dominated first place. We're on BNB, we're dominating first place now. We're going to go to Solana, we're going to do the same thing. So we're just going to completely try to dominate this space on every chain that we can. And we hope that, that more people can join us on that journey.
Yeah, amazing. Thank you so much for watching this episode. And if you enjoyed the content, don't forget to give us a like, comment, and subscribe. Thanks, Michael, and I'll see you next time.
See you. Bye bye.